Rohr here with a very concise highlight early on Friday, March 27th, 2015. It's currently 6:30 a.m. and we're coming to you so early because we want this out prior to the U.S. GDP data at 7:30 a.m. That's the Q4 final look that, based on weakish data, is looking to be downgraded from 2.2% to 2.0, and that may be the crux of the matter, whether it's still got a 2 in front of it or it's below 2%, given the weakish data we've seen outside of employment in the U.S. so far this year. So, what does all this mean to the markets? And the answer is that we've had a rather negative week in spite of somewhat better than expected data at times. So it started out with the weak U.S. durables, and ultimately that put the market under some real pressure on Tuesday. Mid to late morning into lunchtime, this market ended up cracking the 2078 to 75 support. You can see that was critical pullback support last Thursday after the FOMC, last week Thursday after the FOMC surge. That was where the June contract held. It's an important consideration on historic congestion as well. And even on the day, after getting down and looking like it might want to hold 2060 to 58, it ended up the day below that. And not surprisingly, that left spillover into the 2040 to 38, maybe 37 support, and in fact it traded right into 37. We'll get back to why that's so important on the intermediate term charts, before rebounding all the way up for a test of the 2058 to 60 area. Now what's important here, along the way it broke up out of about just below 2050 on its aggressive downward channel. Now it's off around $3 today, down into approximately the 2046 area, and that's kind of important because if it were to remain weak, it would look like it's giving up this near-term aggressive downtrend up break, and that could leave it under pressure back toward 2040 to 38. But ultimately, the decision will be whether it is below 2037, and if it is, then this recent trading low going back to the 2034 area and even somewhat earlier lower levels right here where this Fibonacci starts right around 2031 and a half look interesting. But the fact is, if you're below 2037 to 40, next real support is not until 2020 to 17 with the bigger supports. That's an interim support. Bigger supports back around 2000 to the upper 1900s. If it should rally, resistances will still be up at 2058 to 60 and back at 2075 to 78. And that's historic as well as the recent activity that has conformed to that. That pretty much does it for the short-term view of the S&P 500 future.